Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, May 23rd. Michael Boutros here with you this morning. Good to be here. Pooja, Sandy, Steve, Ty, Ziad, we got the whole crew. Karthik, good to see you guys this morning. Mark, Kazaa, Graham, Gary, Alan, good to be here with you guys. D, as always. So on the list for today, I don't really want to waste too much time with the dollar index. We'll go over it real quick. From last night, dollar yen, same thing, kind of still holding its weekly opening range, but at an interesting level. The commodity crosses are quite interesting, playing catch up here. Kiwi breakout, pushing Euro key lower. The Aussie really trying to break resistance right here. So Euro Aus worked out pretty well. Pound Aus worked out pretty well. We'll go over those setups from last night. And then obviously we'll take a roundabout and go over the Aussie dollar, Euro, Kiwi, dollar CAD, and Euro CAD from the previous update. If there's anything off this list you didn't hear that you'd like to, feel free to throw on the message board as always. Karthik says good morning to all. Great to see you, sir. And at the same time, guys, that pushes all the commodities into very interesting levels. Gold holding just below resistance, crude holding just below resistance. You have the S&P right now at resistance. You have the Nikkei 225 at resistance. It's a very interesting day to start off into the U.S. session. Obviously, our thoughts and prayers goes out to anyone in the UK on the back of that horrible incident overnight. And we're not really seeing too much action in the pound or any move on that. Okay, let's jump right in. First things first, here's what the dollar index looks like real quick. I just want to breeze through this. Look, the risk is a little bit lower. I don't have anything necessarily as support here. It seems like 96.80 is holding at least for a near-term opening range low for the week. So just watch that level. The key level that we've been waiting for that we've talked about is 96.47. It's the 618 retracement of the entire advance off the lows that you made last year. Also, slope support. This is just a basic trend line extending off of the parallel that we made for the highs of the year. Just as a note, guys, if you're going through the charts at any point and you're wondering what slope is derived from, they're all color-coded. So if it's a dashed line, the parallel is the other dashed line. If it's a solid line, the parallel is the other solid line. I try to keep it as color-coded as possible. But a long story short for the index here, key resistance still 97.67 into 87, this zone here. The major support that we're looking for is still 96.47 on the downside. So it's marking divergence. You could see a little bit of a pop higher. I was talking with D ahead of the webinar today. Kind of liked Euro a little bit higher near 12.85 for a peak. Didn't quite get that peak. We'll look at that in a moment. That could be the drop into 96.47 for the dollar. I don't know. At the end of the day, we have to just stay disciplined, okay? The focus remains lower below 97.87. Here's what the daily chart looks like. And again, I mean, we broke it. We came back, tested it as resistance, and pushed off. There's no reason to really doubt it. You also have some former swing highs there, the 50% retracement. Again, we don't have it here on the daily to keep it clean, but a parallel off that also keeps resistance right around there. That's what you're looking at here, this red line. So, if it pops higher, so be it. The opening range high is just below it, but we'll keep our focus lower below this 97.87 region. And again, that's the big support at 96.47 from a technical standpoint, from a level standpoint, from a slope standpoint. It's a big level. Okay, so don't be too surprised if you see some lateral motion, some chop action here. We're trying to get that move into 96.47. If you're not already holding something on the index per se, there's really not much to do here at this point. Questions? Can you review gold, silver, and copper if we have time? Saru, I got you. Gold, silver, copper. I like gold. I haven't looked at copper, but we'll take a look. Yeah, no worries. All right, that's the dollar index, number one. Number two, here's dollar yen from last night. There's really not much to update on this. This is what we were looking at last night. The basic premise, again, we talked about this in the webinar yesterday, the 12 20 break here kind of changed things, right? Really, our bullish invalidation that was marked on SB was 1240, so we got out of that, or that shifted the focus early on. We rebounded really nicely off the 618, and that's sort of where we started off the week, still talking about that consolidation. Broader focus is now lower below that same slope. Key support to the downside is 109.60. That's kind of where I'm looking for a bigger mark here. You got the 200-day moving average, 764 retracement, the gap open, which we tried to test to get into. We didn't really quite get it. And that's sort of your first region of big support, I think, on the way down. Where it stands right now, well, this is what the 240-minute looked like. You were opening the week just above basic slope support. Nothing fancy. And the opening range is taking shape right here. You're looking for a break. Focus is lower, sub 1220. Once you do get the break, you got 110.51 as a target, 109.75 as a target, and then again, that 109.46 level, 200-day moving average, confluence region right there. Here's what the 120-minute looked like, and here's what the short-term chart looks like now. Okay, you're still basically preserving the weekly opening range. You're looking for that weekly opening range break to give us the tell. And again, targets are really unchanged. So I don't really want to spend too much time on this. It's a very, very tight range. If you're intraday, like scalping it, you could probably get some juice out of it, but it's a waste of time if you ask me. Let's just wait for the break and we'll see. Either you get the topside move and you look for exhaustion near 112.20, or if you get the downside break, you're going to have to wait for some sort of recovery targeting 110.51. And again, initial targets would be 109.75, 109.46. This entire region is important. Don't forget the 200-day moving average on the daily chart is right there too. So the levels are clean on dollar yen, but as always is with the abomination, it's going to do its own thing. Patience pays. I think on this one, with what's happening in risk, you just kind of have to be careful because the dollar's been taking a beating as well. So if you see markets rally and the dollar is not able to do much, you might get a nice directional break here. Either way, risk is lowered sub 1220 and key support into 109.46, 109.75. Sandy says, I love how Aussie dollar is still bullish, helped my sterling Oz short position. Right on, Sandy. Right on. And sterling Oz just came off a big, a nice juicy level. I love that. Nice moves. Yeah. We'll go over that for sure. Any questions here on dollar yen? I'm going to breeze through this. There's really not much. Watch the weekly opening range. Again, levels are pretty clear. That's number 2. Number 3 is Euro Key. Here's Euro Kiwi. What can I say? Another beauty on a commodity sort of breakout. Again, the commodities seem to be playing catch up with the markets, and Jamie called it right on. It's a nice play here, I thought, for euro weakness without actually having to take a long position on the dollar, because who the hell wants to be long the dollar right now? We're not quite at support. And with the Kiwi seemingly breaking out of that major key resistance level we were watching all from last week, I thought this would be a prudent move to the downside. So here's what this setup looked like, last night. Where are we? Here we go. We had just come off resistance last week. That was the 618 retracement. Beautiful touch. You can't get beautiful touches more than this. Right at 62.27. I think the high registered just higher. It was, what was it? 62.36. And you close lower on the session. Okay, great. The following day, you open up on Monday and you just do a reversal day candle right into support, and 160.45 into 160.70 was that key support zone that we were talking about. Bring it to the intraday chart, and that level converged on this near-term slope. Now again, I don't know if this is the proper slope yet. We haven't had too many touches of it. I'm not going to advocate like following this to the T yet. But that 50 line certainly gave us 2 nice rebounds. If we jump into the 60-minute chart, even more, 3 nice rebounds, and it converged right on 60.45. So I just thought I'd tell you guys, yesterday, look, if that breaks, you got the previous weekly low right there. It's probably going to be the onset of the correction. Initial target's 159, and then this is the juicy spot, 158.60, let's call it, into 158.34. If this median line formation is the slope the market's going to play for a while, that converges on upslope support and a basic 236 retracement, nothing fancy of the advance. That gives you like a nice little sweet spot there. So that's where I think Euro Key has some potential. If you're holding shorts from last night, that's sort of a big spot I'd look for. If you're looking for fresh exposure from here, you really got nothing to do unless this thing kind of finds recovery near, 160 again, let's call it. Basically, maybe an upside touch of this median line to check that as resistance, then a final drop if you're looking for fresh exposure. If you're holding exposure from last night against the highs, again, I'd be waiting for 59.05. Don't cut it too close, but that's basically what we're looking for. So the setup remains the same. Levels remain unchanged. I'm going to just continue to assume this fork is in play for now. Again, we'll look for confirmation on this as the move gets deeper. Here's what it looked like last night. So a nice opportunity there to play the breakout in Kiwi. Don't chase it at this point if you're not short already, but I do think you head a little bit lower from here. Any questions on Euro Kiwi? That was number 3. Where to place the stop? D, if you're already short, you're short at 60.47. Oh, you caught it right to the T. So here's the thing. If you're short at 60.47, as you get into 59, I'd be looking to take some off. As soon as I take some off, I'd be putting the stop against the London high, which basically takes you a little bit close to your entry. That's sort of objective where I'd put the stop. Let's see what intraday price. Hold on one sec. Yeah, you don't even have a slope really to work with Yeah, I mean, it'd have to objectively, to be honest with you, D, I'd have it against the London high. That's just how I would play it. Now that would take a lot of your limit, a lot of your profit out of it. So I don't know if you'd want to do that per se. It's like 60 pips from where you are right now. I'd be more focused on trying to trim off the position necessarily than just placing a blank stop on it. Objectively, I think against the European high is how I'd play it. Don't think you quite get it up that high, and if you do, you'd probably want to get out of this trade anyway. But on a scalp basis, you're giving up a lot of your profit on a run like that. So here's one other way I'd play it. Once you have some sort of assertion that you have a low, so you're building divergence here, right? Let's say this breaks out and the US opening range gives you a little pop and it breaks higher. Tack on a quick retracement. If it crosses through a 236, sometimes that'll be another position I'll take a limit off of. And if it rallies higher, then again, the objective stop would be against that London high. But I just hate to see you, watch your profits evaporate if you do get a recovery from here. So remember the discipline as well, guys. We're not, we're always looking to hit the next target on the scalp, but also you want to be mindful of what the ATR is. So with the average true range of the day, take a third of that is what I've been working with. I typically, talk to people about using a quarter of the daily ATR, but the ranges have been kind of tight. So I've been stretching it a little bit to use a third of what the daily ATR is. So if the daily ATR is giving you 100 pips at 33, objectively, I'm looking to tick some off. Maybe a lot here, a lot there, but I don't want to, always go for the gun for the next target on every single run. Okay, we have to be a little bit more sparing just to accommodate for market volatility. Make sense? That's a good spot, D, 59.20, basically just below the lows here. Yeah. Give yourself a little bit of a cushion. Let me also just see one thing here. Just want to see where the 1618 shows up. Wow, 1618 comes in at 58, 58, 57 too. Further highlighting that critical barrier. All right, big level. Okay, sorry, that's Euro key. Let's move right on. Euro Oz, number 4. You got me all into intraday price action D. I hope that helps. Euro Oz looks like this. Here's what Euro Oz looked like last night. Similar situation in that it was coming into a key resistance level. That level was defined by the 1618 extension from the advance off the lows here. You also had a parallel, okay, extending off the highs from late January. I'm not really thrilled with it, but it's there. And price action has been holding as momentum sort of kind of struggles to hold that barrier above 70 on the daily chart. Exhaustion is the name of the game. It's always the hardest game to play. And as I always say, we don't want to get caught catching highs, but it's important to recognize when the conditions are there. And certainly the reaction we got late last week on this intraday chart, and then this week, the fact that we were starting the week and the weekly opening range right below that, I think just warranted some attention. So here's what the 240-minute looked like. Again, you know, these channel breaks, never really my favorite plays, but you could see the pivot. It's just clear in price. A break below is resistance. A break above, it was support. A break below, it was resistance. And now we're below. So why not keep it resistance? The fact that you had those two fib levels at 50, 46, and just above it, the bigger 50% retracements, the longer term at 51, gave us a nice little range. Look for the pop here into the US, into the weekly opening range. If it fails, support is still at 49.13. Which is the 2016 open and converges on some median lines I'll show you in a moment. So that brought us to the intraday chart. Here's the 120-minute look like. You're looking for exhaustion, momentum, struggling to make any progress. Here to the upside, again, looking for near-term triggers to the downside towards 49.13. Here's what the live chart looks like now. Okay, really quick for the daily chart, by the way. Right? Nice reversal off that region. The upslope here of this formation, which looked like it was done and clear. And this is why sometimes it's prudent to keep it for now. This slope, guys, has been so ridiculously clear. I mean, look at the advance on the way up. It was like literally the high for last month. And then once we broke acceleration on the pullback, it was literally the low, same slope. So on the breakout, I'm just going to leave it there. It converges now on the 2015 low day close, okay, which is right here. It was December, and the 2016 open. Huge pivot. Huge pivot. Was the highs. Should be something here on the way down. So break back below 70 in momentum. Don't know yet. You have to watch the close today, but looks pretty good. Go back to the intraday chart, 240. Looks like we're making initial break of the weekly open, opening range lows rather, and that brings into focus again, that little support into 49, just above 49. That's kind of what the focus is for me right now. Draw it into the 120. Looks pretty heavy. 60-minute. Okay, don't go chasing down here, but we'll see if we can't get that drop into support just a little bit lower here heading into the US Open. And again, might get a little kickback on this one because I'll show you when we go over Aussie. That's kind of struggling right now to push through that resistance region we've been talking about. But I think you get the pop lower. We'll see. Once we get some structure to this, we'll get a bit more clarity. This is the, in my humble opinion, that's the drop. If we get a break below that, you're likely to see a larger correction here in Euro Oz. I think it's largely going to be determined by what happens to Aussie, but in general, this is, you know, a big position for me, a big spot for me. I'm short Euro Aussie at 150, says Sandy. Nice. So you're up about 50 pips at this point. Got a mid. Okay. So stop against, same thing. Stop against the European high on this one. That's actually pretty cool because the European high came in right below the, or right at essentially the weekly open, which is always going to be a spot I'm looking at. And if you can see those gray dots, guys, on the intraday charts, those are always going to be your weekly opens. On the daily charts, the purple dots will always be your monthly opens. So just give you a little bit more clarity on what I'm looking at there. So nice entry on that. Nice entry on that. Not quite a big ATR, so again, be mindful of the exits on that trade, but big spot as you get into the 49 handle. That's Euro Oz. Number 4, questions. Coming right up, Sandy. Pound Oz is next. Going once, going twice. Here's what Pound Oz looks like. Number 5. Pound Oz, Pound Oz. Here we go. And here's the daily chart. So that I have coming into support as we speak. If you're holding shorts on that, which I know you are, Sandy, from last night, that's when I think you want to clean up right here. Here's the setup look like on the daily. The basic premise of this trade, which is something that we've been following for quite some time with this slope. Again, you can see all the previous updates, guys, by clicking on the links right underneath. The major play here was a basic 38.2, which converged right on slope resistance early in the month. The pullback fell short of the initial target, which was right there at 172.60 into 72.80 was sort of the range we were looking for. It fell short of that target, pulled back on a close basis, failed to break back above that 50 line, and we're finally getting that tag now. So again, one of those trades where you had to be a little bit more patient. From an intraday standpoint, for a guy like me, I lost interest as soon as it failed. And here's the drop. Nonetheless, here's support. You got a lot to look at right here. You got 100% extension, an older one that takes us from the lows we made last year. That's 72.86. You got the 100 off the high. That's 72.60. And we're testing that right now. Intraday chart looked like this. The weekly opening range was taking shape just above 73.64. By the way, these are the same targets that we've been working with since the update from the 10th. The only level that was added was 74.60 here, which was just a swing high. But in any event, 173.64 gave out. There's that target that we're hitting right now. So on near term, it's downslope support. It's the 100% extension, so it's 2 equal legs lower. And I'd be a little cautious here, Sandy, as far as trying to maintain short exposure. To be fair, from a slope standpoint, you do have some room. 172 would be like the next level you'd look for. So if you want to leave some on, bring your stops down to the European high, it might be worth it to leave a smidgen on. But from my standpoint, if I was in the position, which I'm not, just as a disclaimer, regrettably, I'd want to be taking out a big chunk of the position there. So here's what it looks like, I guess, on the live chart. Well, here's the daily. Okay, boom, we're right there. Nice trigger break last week after we failed to break above that key region. And the intraday puts us right here. This is the same chart that we've been following for the intraday chart. So there's the formation. There's a whole lot of parallels, guys, but just to show you the efficacy of the current slope and why we started the week saying this thing's pretty vulnerable, right? Bounce, bounce, bounce. And then you saw us continue to hold below that major key threshold. And here's that near-term target. So watch for some support here, Sandy. If it does break, your next downside, like I said, would be around the 70 handle, I would look, around that median line. Then the yearly open comes in at 71.20. And I think that would take a little bit more substantiated pound weakness to help us get us down there. But that is Pound Oz. Watch for near-term support here as we open up the U.S. trade session. Initial resistance right back at 73.64. At this point, bearish invalidation, by the way, I would drop down to here, the weekly open. If we break back above the weekly open, forget it. This thing's probably going to just mark a resumption right up and rip some people's faces off. So that's where I would keep broader bearish invalidation, near-term support 72.60, and again, you know the downside targets. Kelly, yeah, I appreciate that. Cheers on that. I have only been trading 2 pairs, says Sandy. I'm assuming both of those are those Aussie crosses, right? Well done. Well, you're doing well then. Cheers to that. Also, one other thing to keep in mind, Sandy, just as a note, this is also the monthly open. So, another reason why I'm kind of timid that you might get some sort of rebound here in U.S. trade. But also another reason to keep it if it breaks. I mean, if it moves below that, you could probably drop your stop right above the monthly open again and see if you can run the next level. But for me, this is sort of a big pivot. Okay, so while we're talking about this, let's just segue quick to the Aussie. Here's what Aussie dollar looks like as it struggles to push through its resistance. So on the daily chart, it's clearing up downtrend resistance. And a big level that we've talked about for a while is that 74.90 level into 75. It's pretty big, okay? You have the downslope for the current operative formation we've been following just off of this year's high. You have a basic 38.2 of the decline from that high. And if today's close is legit, you got some stuff to worry about if you're holding shorts, because that would be sort of just a kind of a basic breakout. You even have some triggers here that have all kind of given out to the upside. Okay, even looks like it broke and tested at support, and now it's moving off, which is kind of confirmation. But in any event, today's close will be important. Yesterday's peak was right there. In fact, I put a piece on Daily FX saying that the long side is at risk well below 75. And you got a little bit of a pullback. We closed well below. Asia trade saw a drip back into 74.65. Here's the plow through. Don't doubt it. If it closes here, the next big range isn't that far off. Okay, it's 73. What did I mark yesterday? Because you have the 200-day moving average, you have the 100-day moving average. Here's the update from the previous session. 73.82 and 73.85. This whole region. Oh no, I'm sorry. 75.40, 75.50, right here. Right here. Okay? 100-day moving average. 200-day moving average. 50% retracement. Just on the upstretch of that, the monthly opening range high. You want me to stack up more? I can't. That's as many technical factors as I can find. But just to put things in perspective, that's a big level. So Aussie dollar on its way. Here's what it looks like on the intraday chart. I can't get excited right here because it's testing upslope support for the near term, which is just basic channel. I have confidence in this because we have 3 or 4 touches already. A parallel off the high basically has us testing that right now. So, you could get a pullback. I'd look for initial support right back at 74.90 or so, former swing highs. Okay, it's the former downslope support. If this is legit, the follow-through should see 75.40 relatively soon. As I always tell you guys, I don't like to see these breaks of multi-month formations be drifters. You'll get something like that every now and then with the abomination. Dollar yen will do that all the time. In fact, on the breakdown in dollar yen, you got that drifter for a while before it actually materialized. But largely speaking, when we see these breaks, I want to see the break see acceleration or fuel acceleration. If we don't see that, I'm going to be a little bit more timid and not really want to attack this. Kiwi dollar is a perfect exemplary example of how when you get that break, you see acceleration. And this is exactly what you want to see. So is Aussie going to play catch up? Probably. Let's see if it can materialize. The first focus is this trend line right here. Again, regrettably, there's not much room before your first initial target, but you do need to be mindful of 75.40, 75.50. It's going to be a big read. I'm not a guy who really goes crazy about playing moving averages, but you can see that the 100 has been a very nice pivot in price. I don't take anything for granted. I always just look at what price action did previous, right? What everyone says, what everyone thinks is kind of irrelevant to me. I want to see what happened in price. And you can see that, both the 2 and 100 day have given us some pretty decent pivots in price. The fact that they lie on the 50% retracement might be something I want to pay attention to. Okay, and it gives me a 10 pip, 15 pip range. So Does that make sense, guys, on where we stand on the Aussie? We'll go over Kiwi in just a moment, but that is Aussie dollar. Number 6. Okay. Could we do oil? Sandy, I will try to get to oil. Let me add it to the list. I do have to cut it a little bit early today, so I will try to do as fast as I can. Kelly says, you called the Kiwi last week saying if it passes through 69.70, giddy up. Good call, mate. Kelly, I appreciate that. Sandy says, I will get out of both my Aussie positions if Aussie reached the monthly pivot, weekly R, all cluster there with your levels. Amen, Sandy. Love to hear that. Yeah, it's a pretty big level. And the thing is this, if the breakout is legit, I don't want to see meandering here. Let's get this thing going, you know? So that's Aussie dollar. Okay, number 7, here we go. Let's do a Kiwi setup real quick, and then we'll jump into the euro. Here's Kiwi with the acceleration. Like I said, beautiful play. Here's what it looked like earlier in the week. We'll come back to euro in a moment. Here's the daily chart. You know, we've been talking about, well, this is the 240. The daily chart can be found on the 18th here, guys, but we've been talking about this zone since the start of the month. It's kind of ad nauseum. 68.50 to 68.60. You've all heard me say it in the webinars here for a very long time. It was also defining the monthly opening range highs at this point for the month of May, and was just a big, big region. A huge pivot in price, and a level that we were looking at for Kiwi for a while. Really, the bearish bias was evident while below this level. This was bearish invalidation. The fact that we came off of this mark was huge. Again, if we take it back to the daily chart, that 68.28 level, again, was a level that we had marked for months, was the 2016 open, and basic slope support off the lows. I mean, you don't get more basic and beautiful touches than that. Add to that, that rally or that rebound came on a really nice divergence signal. Remember, when we talk about divergence, and this is something, again, that I like just to bring up to your attention, is, you know, the closer the reference points or the divergent points are to 50, those are your strongest signals. Not when the divergence points are way above 70 or way below 30. So the fact they had really nice divergence here into the low on a beautiful touch, you didn't really get confirmation until this move here. You finally cleared an objective monthly opening range, shifts the focus to the upside, takes us above 50 in momentum, specifically above 60 here for the first time essentially since February. And now you're coming into the initial areas of resistance. The first area that we're talking about is basically being tested right here, and that's the high day close that we made subsequent to the drop in February. So the high day close for April, what was that? Excuse me, March 21st. We're testing that right now. Just beyond that is the 100-day moving average. Again, not a guy who goes crazy with moving averages, but check this out. Touch support. Touch support. I'm not really going to stress that. On a closed basis, strong resistance. On a pass-through on both occasions back here in November, acceleration to the upside, acceleration to the downside. No meandering. No meandering, right? So watch the top side, okay? At the end of the day. If you're holding longs, this is where you want to be taking a little bit off. It is also the April objective high. So you're coming into an area of interest here for initial Kiwi resistance. Just higher, you have slope resistance, 70, 76, or thereabouts. Here's what the intraday chart looks like. And here's what we look like earlier in the week. Okay, so the 240-minute chart really highlighted the critical nature of this resistance. A topside break. You're looking at 70.30. We've taken that out as resistance. Just higher, okay, is current upslope resistance. If you guys remember, we were working with a slightly different slope. I adjusted this earlier in the week, and I even noted in the report, I think Jamie pinpointed it. Instead of using this low, I think this low is much more effective. It also caught these two lows. That puts, you know, the upper parallel just a little bit higher than our initial target. So Leaves a little bit more room. 70, 75, like I said, would be the first area you'd start to look for, upslope support. Keep in mind that 100-day moving average comes in just above, or excuse me, just below. Let me bring it back right here. So let's call that 70.50. Okay, initial, with that bigger level being just up there at 70, 75. Beautiful play though. Momentum isn't overbought. Don't try to fight this. Don't try to get cute. If you're thinking about short exposure, go drink a cup of coffee or do something. It's not time quite yet. You either want to get a stretch into that region, okay, or some sort of exhaustion signal off this is where I'd even start to look for a near-term short signal. Objectively, if you break and start to move sub 70.20, let's say this region back below the 50 line, which is was former resistance here, maybe you get the pullback. But even then, guys, I really wouldn't be interested necessarily in trying to play it. I'd be more interested in trying to fade that move for a final stretch. Okay, it's got some legs, and we finally cleared a big zone. So not the pair I would necessarily want to fade just yet. Okay, that is Kiwi dollar. Any questions on Kiwi, number 8? Okay, really quick here. Dollar CAD. Let's jump through. What can I say? Here's what it looked like earlier in the week. Here's dollar CAD now. We came into that support. I was a little concerned that we'd get a little bit of a rebound off this earlier in the week. We wanted to stay bearish while below that median line. Downside break, we're looking for 34.10. Well, I mean, we're pretty close at the, was it 41.10? I'm sorry. 34.41, excuse me, which is a 618 retracement. You have former swing highs, 34.41 to 34.55. The low so far registered exactly at 34.56. So watch this near-term support, maybe a little bit of a bounce. Again, I'm not thrilled with the break. You got the close below it technically, and you are seeing a little bit of acceleration, but whatever. It was hard to try to initiate a new short position on this if you weren't already short, because you didn't even get any type of recoil, and the range is not all that big. But anyway, look for this as initial target, again, just lower. And the reason I wouldn't want to necessarily advocate anything new from here is the 2017 open, the yearly open, comes in at 34.35. So momentum flattening out. I don't know. I got a lot of nothing to do here with dollar CAD. Who was asking about this earlier? We'll take a look at oil right now real quick since we're on dollar CAD, but that's kind of where I stand here on dollar CAD. You're basically staring down support, probably 20 pips, 15 pips lower from where we are here. That's what you need to break. That's what you need to break to get this thing going. I do like it still lower. But right here, you have to respect that near-term 618. You have to respect those former swing highs. Also, keep in mind that the next downside, if we do break this level, is going to be basically like 34.10, which is the swing low that you made right here. Okay, but levels remain, unchanged from earlier in the week. Questions on dollar CAD? Okay, let's go to crude real quick since there's so many questions on that. I don't necessarily have a near-term setup, but I do just want to highlight resistance. And it's the same resistance level we talked about in the webinar yesterday. And the reason I was concerned about anyone who's holding long positioning, same thing. It's this thing here, the former swing highs from June and the close, high day close from October has been a very decent pivot in price. And that converges on the upper parallel right here. 51, what was it? 51.38 into 51.60. Basically, yesterday's high caught the very end of that range and pulled back. So You know, watch for resistance. It would make sense if you get a little bit of a pullback, actually, in crude from here, maybe fill the gap or something to that degree, would offer up, you know, a dollar CAD rebound, maybe a little bit lower off that 34.40 barrier. But the intraday picture doesn't look all that convincing to me just yet. Here's what it looks like. This is the reason I'm still sticking with that slope. It's just because on the intraday picture, you did see some really nice pivots along that gradient. Kind of messy on that, but the 50 line, or I think that's the 618 line for this, yeah. 618 line catching that. On the break here, 618 line saw the acceleration. Obviously, we gapped higher. You know, you got a really well-defined weekly opening range. That's basically what you need to focus on right now. Weekly opening range below resistance. If it pops higher, I don't even want to touch this. You're probably seeing 54.30 again. But you know, this is the 618 of the decline. I think it's just kind of sticking here for now, seeing a little consolidation. So I don't really have a clear-cut directional bias on this, Sandy. I bought oil today at the London Open above yesterday's low at 50.60. Okay, so you're in the money. Yeah, I wouldn't get married to the position. You know, if you break through the highs, sure. Like I said, you're probably going to see a decent breakout, but until we break the weekly opening range, I'm neutral. I'm neutral. And with where dollar CAD is, I think it pays to be. Sandy, does that make sense? Wish I had a little more conviction on you on that one. Karthik? Okay. I mean, the broader focus, you got to keep in mind, is still higher too. And if the dollar has more to correct, yeah, sure. But from just a price standpoint, a structural standpoint, I think the weekly open here is going to be the tell. Cheers, mate. Okay. So that is number 9. I want to backtrack real quick. Number 10 will be Euro. Obviously, there's going to be a lot of attention on this. By the way, keep in mind the BOCs later this week. So for anyone trading dollar CAD or focused on this trade as well, you do have event risk coming up by way of central bank interest rate decision in tomorrow, Wednesday. Okay, so if you have any open positions or you're thinking to holding something a little bit longer term, might be something you want to take into consideration. Euro dollar coming right up. Okay, I was talking with D about this earlier in the session. Look, you could be seeing near-term exhaustion. I would have loved a rally into 112.85. I think that was a really nice spot. That would be a 1618 extension off the low. You have some slope there for the current operative one that we've been following from the lows. It would kind of be too clean for comfort, I guess. But look, I want to see how the U.S. Opening looks like. It does look like it's showing signs of exhaustion. We've been talking about the divergence. We've been marking into those highs. Again, from a timing standpoint, this can stay like this for another couple of days before it does anything. But it does look like it wants to turn over. Your first initial support that you want to look for is right here at 111.90. The reason for that is that you have the weekly open just ahead of that 111.94. You have that 88.6, which I don't really care about, but slope support, okay, or the median line for the current operative slope we've been following right off the lows here. And that would be the onset, I think, of a little bit more of a correctionary play into that key support. We've been talking about 111.28 for a while, 111.25. That's still the big area. Basic slope resistance. You saw acceleration. Major key 618 retracement for the entire decline from last year's high. Big region, right? Nice pivot in price, former swing lows. It's all loaded up there. I don't think we quite get that low, but that would be the objective move on a break below this region, which is why for me, right now the focus is on that 111.90, 112 on a move lower, okay? If we pop higher, you still need to contend with 1285. I'm not going to forget that, but, you know, we don't want to fight this if it moves higher again. Questions on Euro. If you got the kahunas for it, you're looking for exhaustion. If you're looking to play the safer route, or you're looking for a little bit more of a trend play, you're looking to see what happens at 11.90. If it breaks lower, 11.28 would offer long positions. If it breaks higher above 12.85, you wait for a pullback back into 12.85 to try to play a long position towards target. The top side, if it breaks out, guys, there's tons of room. 113.40, 113.66. These are just initial targets. Excuse me. With Eurodollar, I was measuring wave 3, done a possible pullback to 111 for wave 4 to end, then bad wave 5 goes, says Kelly. Yeah, I mean, I'm not a big Elliott guy, Kelly, so I don't really focus too much on the longer term plays. 111 would be a beautiful pullback, in my humble opinion. I don't think you get quite that low. I don't think you get quite that. Now you're talking about 110. Yeah, I mean, look, 110.20 is my bullish invalidation. If 110.20 hits or you break sub 110.20, you could see a bigger collapse in that. Usually the point of acceleration, especially when that point breaches the former range highs, that's your break point as far as trying to keep any type of assertion that that directional trend is holding. So the fact that that converges on near-term slope support as well is kind of my break point. All right, so Kelly, again, I appreciate that. He says, I add your charts to mine, and oh my God, stellar performance, love being in the room. Well, it's good to have you here, sir. That is Euro number 10. Euro CAD, I just want to touch base on Euro CAD, another one that's been a decent play. And if you're playing the CAD and don't want to touch the Euro, here's one that I think hasn't moved yet and might get the opportunity to do so later. So this is a trade that I highlighted, just the daily chart. I put it sort of on the radar the other night just because I thought it was prudent to watch this region at 52.20. It's the 618 retracement, so inherently it's a key Fibonacci ratio of the decline from last year's high. But you also have some slope resistance there, extending off the highs that you made in May of last year. And current operative, a little bit more of a near-term slope, if you will, on the daily chart, just off of last year and this year's low. Take that parallel and extend it off that swing low we made in October. Caught the highs, and here we are at the 618 convergence. So you didn't get the stretch into 52.20, but that's sort of a big level here for EuroCAD. So if the weekly opening range breaks to the downside, if you get an emotional stretch or some sort of spike into that region and failure, that might be the exhaustion play. Long story short, very similar to what we're looking at on the other crosses. Divergence into a major Fibonacci and structural resistance from a slope standpoint. So the vulnerability is there, recognizing when the conditions are right or the conditions are there for some sort of exhaustion pullback in trade. So EuroCAD, another one that I'll be looking at. From a near-term standpoint, it's been boring. There's really not much to look at, but the weekly opening range is pretty well set. Okay, so the 240, 120, the 60, really just reinforcing a near-term weekly opening range below that 52.20 barrier. And again, if it downside breaks, you have pretty clear-cut targets of what you're looking at. The 2016 open is just a near-term target. You'd want to tack on a quick retracement once you have that break, because right now we have no validation that this is a high. But if we do break the downside, tack on a quick retracement, and you'll see some interesting levels come up. First, I wouldn't really pay attention too much to 50.64, but it's the 38.2. First, the fact that the 50% comes in right at that 2016 open that we just talked about. So right off the bat, 50.20, okay, 50.19. And then the key 618 comes in at 49.70. So it's a nice range of 50 pips or so between our levels if this does materialize, okay? You're just at resistance. At the end of the day, this is bearish invalidation for the near-term sort of reversal play. If this breaks, yeah, 53.70 is your first initial target. Lots of room. I don't even have it marked on the intraday. Maybe a soft target there at the highs, but $52.80 soft target, but that's really your first next major level to target on a breakout. All right, that is EuroCAD number 11. Okay, a quick run through the commodities because I have to run. Gold, silver, and copper. Here's what gold looks like real quick. Sarub. Look, very similar. I don't really have a major concrete resistance level. We talked about 1264, which is where we peaked earlier in the month. We came off, didn't complete a 236, just ahead of that, and here we are again. I don't really know what you want to do with that. I'm looking for a very similar play in that you could see one more high and then exhaustion, which would kind of match up really nice with one more low in the dollar index, then rebound. So I don't, have a play from here, but I can tell you that I'm still looking at 1264. I can tell you that just above 1264 is the monthly open at 1268, and that converges on the upper parallel. So if we clean this up a little bit, don't need all these extraneous circles. Sort of these are low. That's the bearish invalidation. If you were to break through the monthly open, it would be bullish again, in my humble opinion. But as long as you're below this, you're risking some sort of vulnerable for an exhaustion, maybe one more spike high than a pullback. But just focus on the weekly opening range right now. That's like this region here. And does the 50 offer anything? The 50 line's right there too. So if you add the 50 line to that current slope as well, it hasn't really given us too much, it hasn't been too fruitful, but the buy sector comes in right there. So either way, 1264, 1267. All right. Silver looks like this. That I have breaking near-term resistance, the monthly open, and the opening range for the week today. So that one is targeting 1733, the 50% retracement. There's also a former swing pivot here that we were looking at either way at 1733 or 1732.9. Either way, that's like initial topside target on this stretch. But again, if we close above these levels, let's adjust this to the current slope here. If we take that into account, yeah, looks like we're trying to peek through. Could be a fake out here. Could be a fake out based on slope. So if we take channel resistance, we're basically testing it right now. I wouldn't chase this. And if we take slope off the pitch here, the median line is the 50 lines right there too. And then you got 1733. If you're holding longs, target 1730 on this, or 1733. I think that's a good one. And again, I'd be working with this slope here. Looks pretty decent. Looks pretty decent. So there's the updated chart I'd be working with on that one, Sarub, if you want to take a snapshot. By the way, anyone in the room, you can always take a snapshot of the screen of the charts you see by clicking on that camera in the top right-hand button of your GoToWebinar screen. Okay, really quick, copper, and I've got to run. Here's what the copper chart looks like. Anything new on this? Same slope. Nothing really to update on this, Sarub. You came into the upper parallel. Looks like you got failure right ahead of the monthly open in the pullback. Divergence into that high. Yeah, I'd be 1, 2, 3. I'd be looking for a little bit more consolidation and a new low before you move higher. So the risk, although the commodities are breaking out, I wouldn't want to necessarily play the short side. I'd be more interested in like a long position off that. And you need to break through the monthly open to get this thing on a breakout type of trajectory. Let me just see what this retracement looks like. Yeah, it's even a 38 too. Not bad. You know your breakout levels. That's sort of the key region. Your 618, monthly open, converge. You don't get these too often. These are beautiful levels when they converge like that. It's your breakout play. Key support, bullish invalidation. I'd be keeping right down here. You got some former swing highs, Fibonacci confluences, and the median line heading deeper into the week. This is a 60-minute chart, by the way, and that puts you at 255, 256 as key support. Can I have a snapshot of the silver chart just passed? Yeah, I got you. Questions on copper? Going once, going twice. Here's silver one more time for your consideration. All right, and guys, we will wrap it up there. Thanks for everyone who attended. We'll be back on tomorrow. Same time, same place, 8:30 Eastern for another intraday strategy webinar. We're pretty light on data, so I wouldn't really worry too much about that. You get new home sales in the U.S. at 10 o'clock, which could offer some, market volatility. But guys, with everything that's going on with the geopolitical atmosphere, environment, whatever you want to call it, add to that, obviously, the attacks that we saw overnight. I don't really think these kind of data prints are going to do anything. So keep your eyes on market price action as we always do, and I will see you bright and early tomorrow morning. Cheers.